Oh, hang on, it's not. There we are. Welcome to Taking Stock. It is Thursday, and the date is the 14th. I don't know why I always forget the date. 2023. John's here, casual John today. We haven't seen a revisit from that Kashmir. How's the weather in your part of the country, John?
Oh, it's nice, yeah. Nice.
Well,
we had a monsoon a couple of days ago.
Wow.
But apart from that, it's been all right. Yeah, but it's just unbelievable amounts of rain.
And I thought you were in the driest part of the country, aren't you?
We are, but occasionally, well, I mean, no one had ever seen anything like it. We got absolutely drenched on a 2-minute walk, and then when I was driving myself out in the car while it was still raining with the heating on, I just cracked my windscreen.
Really?
It's just unbelievable.
I've got to point out, people just joining, by the way, John is not there at night. He's actually in his penthouse flat in London. That's the spoils of investing in the stock market. You can see a nice little view of Thames, the Thames on the back there. So the topic of the day, John, I want to look at quickly. And all we get is gloomy figures out every day, pretty much. Okay. And today, they're saying house prices, and we've seen this for a while, house prices have fallen at the fastest pace since February 2009. I said, well, hang on a sec. With hindsight, that was a great buying opportunity. Absolutely. You couldn't get a better buying opportunity than that. And in fact, if we go back on that, I mean, obviously, it may be a little bit different here, but if I share the AIM share with you and just scroll back to February 2009. This is it here. That's the bottom. A month later, literally on the 9th of March, we hit the bottom and then it started rallying. So these historically bad figures, conversely, are quite good. They're quite bullish because everyone's worried of course, at the bottom of the market. We're all worried. We're all bearish. But you realize in hindsight, that was a cracking time to invest and start investing. So what do you
do you remember what was happening at that point, which was that the central banks around the world started lobbing enormous amounts of monetary stimulus at the economy. And obviously one of the effects of monetary stimulus has been to generally lift asset prices across the board. This time around, we don't have monetary stimulus. We have monetary tightening.
You wait. Wait. You give me
okay.
The figures, economic figures are getting worse, especially in the UK. They are getting worse. Yesterday, I went across, all the data points. They're getting progressively worse. So what I'm saying is, we may not. I think we're in for a cracking Santa rally. I do honestly believe that because I think we'd be at peak interest rates in the UK. In fact, Bailey has already said, the governor. He's already said, "Oh, listen, we're very close to the end now." But the
end of hiking, not necessarily, the end of
life
of high rates. Yeah. Rates might stay elevated for quite some time. He's referring to the end of the hiking cycle. We are in a, this is generally accepted that the interest rate backdrop has changed. We've been in more than a decade of what are effectively zero interest rate policies, and that has come to an end. We have to get used to a new way of investing, thinking about investing and thinking about returns. The rate hike cycle might be coming to an end, but that doesn't mean that things are just going to go back to the way they were before.
Yeah, but hang on a sec, John, right? When you're climbing a mountain, right, and you can see the peak there, and you're knackered, but you can see the peak. Now, halfway up the hill, it's quite hard because you can't even see the peak. It's really knackering. It's wearing you out. I know this because this time last year, I did 10 peaks challenge in Snowdonia, and it nearly killed me, right? But literally, but 2 or 3 peaks from the end, I felt, I was worn out, say halfway through, but 2 or 3 peaks from the end, I was there. And that's the same in the market. So they can see the peak. There's a little bit of a lift going on. So I don't think it'll be a sustainable rally, but I think it'll be a good rally off the bottom. Then we'll maybe roll a little bit down. And it'll be high lows. And so we'll see more liquidity come into the market. Because once you get to the peak, of course, okay, there may be a long plateau peak. It may be like Tabletop Mountain in South Africa, where it's quite flat. But you walk towards it, and you end up going down. And the next movement is, maybe they're going to say they're going to hold up higher for longer. But the next movement is down, and that's and I think even seeing the peak will give the climbers of this market. In fact, it's downhill the other way, but it will give it a bit of a boost. I think that's what I'm thinking. Good afternoon, guys. AI investor says, and in fact, so yeah, I just think even just psychologically, seeing the peak, knowing the peak's there. It's at the moment we don't know. It's almost like it is like I mean, being in Table Mountains in South Africa. Basically, there's when they have mist over it, it's called a tablecloth, and you can't see the top because it's a tablecloth. Now, what we're at the moment, Andrew Bailey and the MPC. In fact, next week, big week, we've got inflation data and interest rate hikes. So at the moment, the peak is covered in mist. We don't know where it is. We don't know where the top of this mountain is. But sooner or later, Mr. Bailey would come out and remove the mist and say, we're not far off the peak. It's there. It's there. And that, I think, psychologically will give the market a bit of a boost, a bit of a bounce. I'm not saying it's straight up like the great financial crash there. What I'm saying is it'll be a nice bounce off the bottom because psychologically we've hit terminal rates.
There will be a rally at some point. There will be a rally at some point, but I would not suggest. I would not suggest buying indiscriminately on the basis that there's going to be a rally.
Oh no!
You go. Use this as an opportunity.
Take your positions though in good companies. Not go big. Companies. Yeah, good companies. Take your positions, everyone. In fact, if you've done your research, not big positions, but have a bit of skin in the game. Because I do think a nice little rally off the bottom here was going to happen. I genuinely think we'll have a cracking Santa rally this year. Okay. Cracking.
They're not the kind of predictions I like to make.
I love to make them.
I mean, look what happened yesterday over in the US. We had inflation was up again.
Yeah, but up to what? 3.6.
Yeah, but it's up again. That's the point.
But it's down from it's down from 8 what they had over there. But also the American markets, in fact, they have come off the bottom. Since they paused. They have come off the bottom.
And now you get some, and that was driven. We know that was driven by a handful of companies.
Hang on a sec.
It was driven by a handful of companies. The Magnificent Seven.
Let me just show you Russell 2000. It's not. Of course, it's not as convincing. Yeah, I agree with you. Most of the S&P and Nasdaq, it's rallied because this is Russell. I don't know why they named it. I mean, look, we're still. We're still 25% down on the Russell, okay, from his peak there, and we're like 200 days in. But nevertheless, it was down to sort of 1644, and it's now at 1840. That's a good rally. If AIM can
it's a decent rally, but a rising tide lifts all boats, and obviously the performance of the big market leaders on the back of this very exuberant reaction to ChatGPT AI, generative AI. Has dragged everything up, but we're seeing, Apple's, come off a real lot in, since peaking and not too long ago. There is still softness out there, and I say, I wouldn't just dismiss, US inflation, rising, albeit to a relatively low level, 3.7%, much lower than the peak, but it just suggests that inflation volatility is still there, and it's not going to go away, and the fight against inflation is not done.
Yeah, this is what I'm saying, right? This is the market bottom, guys. And of course it is. The biggest fear is at the bottom. Of course it is. And when we look back, we'll be in 12 months' time. Of course that was the bottom. Everyone was so bloody gloomy. Everyone was. And that's when the market gives you discount. If you're not going to buy now, when are you going to buy? When it's rallied like 20%? So no, the market gloom, when we're at peak, in fact, yesterday, peak pessimism. That's where you buy. That's a discount you get for buying at the bottom. Anyway, Informer says from yesterday, bear market is over. If a crap stock like Barclays is booming, then definitely bear market is over. I haven't seen. Is Barclays rallying?
I don't know. I haven't read the banks. The banks have not been great performers this year.
Is it rallying? Well, it's not really rallied that much, is it?
It's bouncing around.
Yeah.
Bouncing around.
And of course, the banks, of course, like I say, they make net margin. If interest rates go up, it's good for them. But also, if you go into a tricky economy, then you're likely to get more impairments, more people going bust, more businesses not repaying their loans. So they got all that stuff as well. So a double-edged sword for them, isn't it? Really.
We've got a question about JD Sports.
Oh yeah. Sorry, John. Yes, I appreciate talking to you. Yes. No. Hang on. Going back, JD Sports is one of the best performers. Over the last 10 years, it was a cracking business.
Absolutely. Still is.
Yeah, it is. And when I was looked at these are one of the sort of models I looked for when I was looking at companies that perform well. I put into a filter best performers the last 5-10 years. This is one of the ones that came up. Game Workshop, another one, and I looked at them. I thought, what do they have? These companies in common that make them winners? And if you go back to say 2013, 10 years ago, it was 6 pence a share, right? And then they went to £2.20. And basically, what they've done is they've had literally over 20% top line growth pretty much every year, pretty much.
Yeah,
we're that now anyway.
It's a funny story. So I managed to cover this a long time ago when I was back at the IC before I was editor, and I was actually covering the retail sector for a bit. And this was a company nobody ever really liked it, and it always traded sort of 8, 9, 10 times earnings. No matter what it seemed to do, it never got re-rated higher, and it was. I'd started looking at it in the wake of the financial crisis, and obviously there's then a big concern, quite rightly at the time, about the economy and the ability of young consumers to keep buying its products, and that they were going to be the hardest hit by the great financial crisis. That youth unemployment, which was very high at the time, would mean that they didn't go out and spend their money on expensive trainers, and that bear thesis was completely wrong, and always completely wrong. Now if you look at the forward rating, guess what? It's on about 10 times forecast earnings.
Yeah.
So it's pretty much as cheap as it ever was.
Yeah.
And has consistently delivered over the years. It's expanded. Yeah. Of course, outside of the UK, as it's got bigger, as it sort of saturated its home market, it's had to find new territory, and it's done that by going into the US and done it successfully, which is a very rare thing for a UK retailer to do. It's operational excellence here, executional excellence. And the big worry always for JD now is that your big brands, your Nikes and Adidas's decide to go direct to consumer. Which is happening a lot in the luxury market as well, but it hasn't really affected them. So I've always found it hard to make the bear case for JD has never ever come stacked up. Nobody's in theory yes, but in practice it's never stacked up. So I'm kind of agreeing with the viewer here that.
Yeah, Steve says, appreciate your thoughts on that. He said, seen some very bullish opinion on them recently, including one analyst who thinks they offer the best opportunity in the FTSE 100. Always a bit cautious around retail, but they are moving into health and fitness, which could be beneficial. Yeah, I mean, I like smaller cap stocks. Now I like to try and get in there before it's big. Saying that,
this is a £7 billion company.
Yeah, exactly.
Trading on 10 times earnings, but it was a big company. Back when I was looking at it in 2008, obviously not as big as it is now, but it's just kind of proves my thesis that you can look at sort of relatively large and established companies and still make incredible returns. There's a lot of market to grow into. There's a big world to grow into for a company like JD, and it has probably the best relationships with its suppliers than any retailer out there.
Yeah,
which is why that direct to consumer threat has really not materialized in any meaningful way. And fashion is important. People, I guess if people cut back, or if young shoppers cut back on whatever they had been buying, streaming services, for example, then they're not going to give up on their trainers.
Yeah, well, fashion is important to that demographic. Yeah, to me, I don't care. I don't care too much, but I've gone past that. But
even things like
I did a case study on 5 companies. In fact, one of them was Boohoo as well, which is a nightmare since. But this was about 3 years back. I looked at companies that have done literally 10, 20 bagged in the last 5-10 years, and it's all about it's all about growth pretty much, and in not just in top line but earnings as well. And so I thought, what's the characteristics of that? What am I going to be looking for in the smaller cap companies? And and JD was one of those that consistently performed.
I mean, by the way, even going to the gym these days, you've got to look fashionable, which is why I think that's again another smart move for them.
Yeah, that's why I give up my gym membership. Right. So here's the indices there. Have you noticed that China has just reduced their lending rate, apparently, just last half an hour? They're really trying to stimulate now in China. They're in trouble. But you see here, some of the miners are up because of that. Anglo American, Rio Tinto, Glencore, and BP, Antofagasta, they're all up. What are the followers? Ocado, Melrose, Unite. Yeah. So what's that? 50 train lines up. Quite good.
Use that today.
Yeah. Okay.
Dr. Martens interesting there. Faller again.
Dr. Martin boots.
Hey! Yeah. Again, this is a cheap stock. This is a really cheap stock. No, they were not. But
they IPO'd and literally IPO'd again. Look at that top of the bull market where there's people throwing cash at you, and all of a sudden it's gone from 450 to 151. And it's a kind of brand. They're quite expensive docs, isn't they? Do you wait? I've only worn docs once in my life.
They cost a fortune. You're right.
Yeah.
I've had a pair of docs.
Strong brand, isn't they? Strong brand.
Yeah, but these shares trade on 14 times forecast earnings. It has had a tough year. And they've had to shift some manufacturing around. But again, this is an iconic brand and one that's very much loved by the fashionistas. So again, not quite in JD territory, but it's, at that price, it's got to get snapped up.
Yeah. Someone says, can you look at Seed? It's an investment company trying to present a general investment image of global health trends. Mainly, I think it's what is it? I think it's cannabis companies, cannabis and all that stuff. I'm not a huge fan of investment companies. I think it was, of course, undervalued for a long time, and it was going to pop. How far it'll pop, I don't know. I think I wouldn't be getting into it here because it's right a lot there. I'd let it consolidate.
No, but there is a strong case for investment companies at the moment because what they were obviously hit very hard by the interest rate cycle turning upwards, and where you've got investment companies that are looking at sort of PE, VC type stuff, that there was such fear about the valuations, and obviously so much of their value is in the future that the interest rates and inflation really matter, that they've been really whacked. So I reckon there's some bargains to be found in the investment company space for sure.
Yeah, I had an alert on them here. So if they break this level, they'll go higher. And they got nice and higher there. But if you look at the RSI now, where is that? RSI is at 83. Now, if you scroll back like that, whenever it's been at this high before, it's never sustained that rise. Okay, so be careful with the relative strength index. When anything's above sort of 80-ish, it needs to have a breather, consolidate. My thoughts on investment companies are literally, if an investment company is investing in say 10 companies or some are listed and one of them you really like, get exposure to that directly, because
you can't necessarily always, can you? That's the point.
No, you can't. But if they invest in 10 companies, they're only as good as the average company they invest in, pretty much. If one bombs, brings the old average down. And investing is very hard. Don't even professionals. I'm not sure I get it wrong.
I'm not sure I kind of agree with that thesis. Let's say you've got a portfolio of 10 companies, one bombs, you've lost 100% of that, a tenth of your value.
No, the average. But
if one goes absolutely gangbusters and 1,000 bags, then but it does happen. This is how VC works. It's how VC makes its money.
No, but this is a micro cap. This is not. We're not talking about millions of pounds in new tech. This is a micro cap. Maybe a bit more movement in the rally, but I'd be careful on the RSI here. You have
to look carefully at the what's within these companies, but there are some sort of, external factors which are easing, which which will make these more attractive. I think, as I said earlier, the inflation, but battle with inflation is done.
Yeah, this is my thought. Let's say, okay, they invest in 10 companies, right? One of those is a potential blockbuster, right? And they've got 10% in that. And then your portfolio, you say, invest 10% in, the investment company. 10% of 10%, you get 1% exposure. It's like, and then you've got obviously exposure to the other ones as well. So it's like, listen, on this is technically oversold. You can see that for a long time. It's quite nice there. It formed a nice little bottom here. Broke up above 200-day moving average. That was when to look at it. And any previous now, if it breaks that previous high here, it'll go higher, and it did. And so, but yeah, I'm not a huge fan of. It depends what you're after, really. Okay. Something else. Michael always posts something and then he retracts it. Michael, bank. I think he was complaining about banks. It never ever gets into banks because of the regulations and stuff like that. But anyway, let's look at the front page of Vox here. Some content. John, you've got the Hornby.
Yes, yeah. Well, we talked about Hornby yesterday, so we don't need to go over that again.
No. I do think that could be a good play, though. It's worth a watch, I think. Like you say, they are almost trying to replicate Game Workshop, and Game Workshop is one of those companies, again, outstanding outperformer. Isn't it?
Yeah. I mean, they've got it's a long way. So the company they bought, Warlord, it is essentially valued at £5 million. Games Workshop is valued at £3 billion. So there's a long way to catch up. But it does, I do like it. It's a very sort of very pragmatic move into a growth area.
Yeah, they don't deal with Amazon, haven't they? Look at that. That's another one.
Right, for the intellectual property. And again, that's something that isn't necessarily there within Warlord, because they buy into intellectual property. But as I said, in terms of what I did discover when I was researching the market, the sort of board games market, I hadn't realised quite how big it was. It's basically over a 20 billion market. I mean, it's absolutely vast. Absolutely vast.
Yeah. Okay, let's look at some more stuff here. So on the front page, news out. In fact, a lot of these companies here. Invinity, first order for the next grid or generation. This is their Mistral, which has been more efficient, and this will take them to
probably going to need a bigger battery. It's out in Taiwan. It's a very interesting deal, mainly because it goes through a partner there, and there's a manufacturing agreement that runs alongside that. This battery, Mistral, it's all about just lowering the cost of storage.
Yeah,
and this lowers it by another factor. So the vanadium flow batteries, Invinity vanadium flow batteries are an order of cost lower than lithium, and this is an order of cost lower again.
Yeah. And by the way, I mean, the forecast in this, I mean, if they attain these forecasts, are quite impressive. They're looking at for this year, 22 million and making a loss, EBITDA loss of 15, and then 2024 up to 30 million. But by 2025 is when Mistral sort of kicks in and get orders for these. By 2025, they're looking at top line 133 million and profit before tax of 8 million. 2026. 215 million revenue, profit before tax of 28 million. So that's, I mean, they are 80 million market cap. But that is nevertheless, if they attain those ratings, that's 80 million market cap. If they attain those kind of forecasts, that is quite impressive, really.
Yeah, they got about. I mean, I was looking back at a presentation from earlier this year. They had about 2 gigawatts of sales in the pipeline at that point. It's huge. The opportunity here, absolutely huge.
Yeah,
really good presentations. Worth a look. I mean, if you want numbers, they're in this presentation, but there's probably been a later one. The first one I haven't stumbled across. Really presenting their progress very clearly.
I mean, so I did hold. They tripped out though, but they may need to raise a bit of cash for next year, maybe, and then they'll get the profitability. But there we are, the resistance there. And it is good though. Higher lows there, that's quite good. So they may pop up sooner or later on something. I call it that. Okay. Also on front page, Hemogenyx. They're basically, in fact, I spoke with Vadim Alexander about this. I'll release it in a bit, the podcast. But he was saying essentially that they put their plan for clinical trials for the CAR T cells to the FDA, and the FDA say, we like the plans, take it forward. So it's the next step. It's still early stages. Of course, preclinical, but nevertheless, it's like I said, if you're dealing with cancer, it's a huge market. It's the biggest, the biggest killers of all. So if you can find some kind of way of dealing with that and sorting that out and solving that in some way, it's a massive prize. Checkit. What Checkit news out? Is it interims? Is it?
Yes, I think it was. It was interims. It's quite interesting. It's sort of workforce management software platform.
Yeah.
They said it to people like retailers, food service groups. It's where you essentially got remote workforces that need managing and sort of need some kind of connection with the business. We looked at this a while back in a sector report as well. So it's signed a big deal with John Lewis, over 3 years. Not that long ago, I worked with Compass, very large contract catering group. Yeah, something that I thought was interesting about what it does. It's sort of loss reduction, which is basically anti-theft.
There's a lot of people complaining about this now. I mean, you talk about gangs of people going in blatantly just nicking stuff, and if you're from a national brand, you're not allowed to touch them, and they know this. They just get away with it. And I'm seeing a lot more videos on. In fact, just watching CNBC, there's a huge problem in what's their equivalent of B&Q out there, sort of bigger store, of course. But they people are walking in, just grabbing these things, and there's people being shot out there as well. Security guards being shot. It's a huge problem, isn't it?
Yeah, well, it was on the front page of the Mirror the other day. There's a lot of
John Lewis, boss of that, was saying, it's a bigger problem.
Oh, yeah, that's right. That's right. Sharon White. It's becoming a very big problem, and I guess the other problem you have is workforce theft, employee theft. So maybe the British Museum should get one of these systems in place. So they managed to lose a load of stuff recently.
I did see that, and I thought, I bet this when they reported that. What was it gone missing? I can't remember.
Well, they don't know. That's part of the problem.
Oh yeah. So they had no inventory, and you're thinking, what? You're a museum. Sure, that's part of what you do all day. Apart from dusting them down, you do an inventory. And then I thought there must be other people around the country in other museums employees who'd nick stuff. And oh no, they're going to do a massive check now.
Yeah.
It's like imagine an old guy who's like a caretaker in Yorkshire somewhere. He's got a Van Gogh on his wall. I better take that back.
It's insane, that story. I think the British Museum displays a fraction of the stuff that it's got in its archive. Yeah. And a lot of the archive, as it turned out, wasn't really very well documented. So, big old
like Argos. Only a bit of it's on display. Why didn't you bring the rest up front?
But anyway, so check. I mean, that's only one of the things it does, but it's sort of just basically helping these kind of distributed site organisations operate much more efficiently. So you help save energy, reduce sort of maintenance overheads, that kind of stuff. Doing really well. It's become a 100% subscription business. Really they have really fantastic company.
Made a concerted effort, a bit like Tide, actually, Crimson Tide, very similar kind of thing, recurring revenue, workforce management, and all that kind of stuff. And in fact, there's some news about Tide this morning, Crimson Tide, isn't it? About strengthening the operational board, and they're both constantly going towards recurring revenues, because of course is more predictable. You don't have to keep signing up in annual clients. You just add them to the top and to the hopper kind of thing, and it builds slowly every year. And that's why these kind of companies are valued more highly, because you want predictable revenue. You don't want to go every year fighting for brand new contracts, and every year you want to keep recurring. And so so
it's very, very much in the same sort of area. In fact, Crimson Tide was mentioned in the same report that I've just mentioned. They're again, it's funny, these software companies I think you really need to understand the industries they work with, their customers, to really understand the value and power of this software. And I don't think we in the UK are very good at understanding how software businesses work as investors. And I think these companies are worth digging into, because I think significant value in them, because they like I was saying yesterday about the NHS, or the day before, digital change is what companies need to improve productivity, reduce costs, and there are lots of great little UK software companies that are delivering it. Crimson works with the NHS on facilities management, and one of the things it's really doing is integrating Internet of Things into what it does. This is something we may have heard about for quite some time, but Internet of Things is going to be big.
Well, it is. By the way, absolutely. Someone saying Geiger Counter. Do you remember we looked at Geiger Counter a while back? It's uranium play.
It's an investment trust that invests in uranium producers.
And I can see here, look at that. Previously, so that resistance there. If it breaks above this, or definitely above this level, because you can see support here at this 40 pence level.
Well, I think we know
it's broken above nicely. Look at that.
This I suspect is related to what's going on in Niger.
Oh, is it? What's that in Niger?
In Niger, there's been all sorts of unrest I'm not sure if there's been a coup there. There's certainly been a coup in other parts of Africa, but Niger is a big uranium producing country.
Oh yeah.
Sells a lot to France, and has been talking about upping the price of uranium that it sells to France to some, frankly ludicrous levels beyond where it is at the moment. So, yeah, there's worries about the Ukrainian supply. Uranium supply.
Ukrainian.
Christ, geopolitical mishmash. But yeah, so that would explain the performance there. There's another company called Yellow Cake, which is in this market. I suspect if you look at their share price, it would have had a boost in recent weeks as well.
Someone said, any news on the SUP share price? So we covered this a while back. There is this worry about regulatory. It's only part of the business, as John pointed out. And in fact, Paul's done an interview. It's only part of their business. And like I said, they're very much for regulation because they stand behind it. Should be for people giving up smoking and vaping, not for teenagers and teenage kicks. I see it's right on support there. It's bounced off that pretty much. But like I said, it's a trouble. When you get this kind of pressure, it's hard to shake it off, even if the business is doing well and should be valued higher. When you get this regulatory worry hanging around stocks, it does suppress the share price. But they're all in favour of speaking to government and helping regulation in this area. So there we are. And of course, disposables is the problem with environmental concerns, isn't it, as well?
Absolutely. I mean, unfortunately, here, I guess it's a bit of a wait and see. They're doing as much as they can to head this problem off at the pass. And as I said, markets do have a tendency to overreact to this sort of news, thinking that the very worst is to come. When, as I said yesterday, it's more likely to be a sort of plain packaging approach that's happened in the tobacco industry.
Most followed is Alkemy Capital, of course, and I suppose they're going to be a bit like sort of. I'd liken them to almost a mining company. They're not a mining company. They will be sort of, creating lithium. What is it? Lithium, sustainable lithium hydroxide production, developing state-of-the-art lithium sulfate and lithium hydroxide facilities in Australia and UK. So that's what we're going to be doing in Tees Valley Lithium. But I suppose the same kind of model will be similar to that, because they have to raise money, I suppose, for this plant and all that kind of stuff to do debt, maybe. So maybe it's the same kind of, so that's the most followed. But
it's quite interesting. I mean, we do look at lithium mining quite a lot. But actually, there is a whole supply chain. As you've alluded to there, production processing being one part of it. I was having an interesting chat earlier with someone. There's a company called Technology Minerals, which is at the other end of it, which is about lithium recycling. And this is a really big problem for the industry. Actually, what do you do with these kind of batteries when they are at the end of their life? Because they are very difficult and dangerous to recycle. So I think Technology Minerals is one to have a look at there. I'm certainly.
I think you just collect them all, then wait for bonfire night, chuck them in the fire. That you get your fireworks as well there. THG, that group, it was called. Awful, but
I can barely bring myself to look at this company.
Why are people following that? Results come out, just dropped, and people are following it. It's like people like jumping off. Go with trends, guys. Trend is your friend. The reason why cliches hang around is so they resonate. They have some truth to them. That is not a good trend. It's
I've only got a lot of cash, haven't they? They do have a lot of cash.
I don't know.
I mean, how much?
250, 500 something. But
560 million of cash equivalents. It's just a very strange company. This very strange.
Well, they've gone through a lot of issues, haven't they? And I just think investing is hard enough. Why are you picking companies with issues around them? Regulatory issues and all that stuff and whatever. Most followed is Greatland Gold corporate update. That's always most followed. Whatever they release, it's one of those companies because it's previously done very, very well. There's a lot of people maybe bought towards the top and hanging on. Hopefully, it'll revisit those highs again. They've announced a 50 million unsecured standby debt facility, which it is a phenomenal riser over the time. But will it regain those highs? I don't know. It will. Well, that's crazy.
Yeah, talked about gold miners yesterday. Tough out there.
Yeah, so Hemogenyx is there. One was followed Invinity, Macango, loop up interim results. Trufin, which I do hold a bit of Trufin. Obviously, three different areas. They're both, but they got the gaming side, which is releasing quite a few games this year, which will help their top line. This is one of the winners today. Is in fact, what is it? Curious Metals. It's a Greek asset, Cypriot, and basically they sold one of their assets for, what was it, a couple of 100,000? I don't know what they're saying, but it said Chris Lambert said this announcement marks an important transition in CMR development. The completion of the sale of the Cyprus asset enables the company to ensure its focus on its wholly owned centered on maximizing the value from the exciting opportunities it's generating in Morocco.
Okay.
I bet they're exciting.
Yeah, let's have a look.
Not for me, they're
my interest is peaks.
Yeah, exactly. That was it. Losers, by the way, tungsten. This is, I don't know if you know this. This is like a starting production at the Hemogenyx tungsten and tin mine in Devon. Okay. Now this is the thing you need to look out for. This one. The reason why it's dropping down 40%. Following the drawdown of Tranche A, Tranche B, convertible loan notes, there's been no current commitment from existing or new note holders to purchase any of Tranche C. Because do you know what? There's a whole alphabet worth of tranches there, and people. And so if the group fails to find purchasers for Tranche C notes, then in the absence of other new source of finance, it would no longer be able to meet its liabilities as they fall due November, which is like 2 months away. Christmas is 3 months away, pretty much.
No, don't say that. Don't say that.
Okay, I won't say that.
Yeah, it's
so that's a worrying thing there. It's a pity because it's a local area. It's in Devon. I don't know what the local people think of that, but it's a pity if they can't get that funding to get something going because they got geocompliant resource 102.1 million tons, second largest deposit. There we are.
I mean, this is I guess it goes back to the whole critical metals thing, and the British Geological Survey put a report out. It wasn't massively long ago about sort of critical metal supplies and all sorts of governments around the world are monitoring critical metal supply very closely, which is why you have seen this sort of revitalization of mining onshore. Or certainly in more local jurisdictions, and yeah, it's tricky. It's very tricky to get these things through.
Yeah, one of the riders I like there. I've been following them for a while. I was going to buy some of these a while back, but in fact, it's not too late. But Keystone Law, and they come at the interims today, and if you can see that they've come all the way down there, and fake break here, which is when a moving average is that steep and you break it, it's not sustainable. Honestly, you have to have the prices to slow down and bottom out a bit, and so it flattens the thing. And now we sort of break a gap up above that 200 moving average. So maybe this is starting a bottom here and an uptrend. But are you aware of Keystone Law at all, John?
I mean, I've looked at it. There's quite a few of these sort of listed legal companies.
Yes.
I've always shied away from it.
Yeah. I mean, they are. Yeah, I mean, they're not cheap. I don't think. When I looked at them last, they're not really that cheap. But I mean, but I do like the fact they come in on a chart there and they're generating cash and all that stuff. But that's funny.
Yeah, I mean, it's an interesting. Law is an interesting market. You know, it was always sort of driven by partnerships. So it was a bit of a shift when you started to see them list. And I guess their argument is that they operate in a slightly different way. They're using technology and modern systems to deliver legal services more effectively. I have to say, my experiences with legal services over the years are that they couldn't be a less efficient industry if they tried, especially when you're trying to get conveyancing done. So,
Oh, I know. My wife at the moment chasing the solicitor non-stop, and he's like, "We're paying this guy solicitor," and he's not doing. And she's pulling her hair out. She's like emailing and calling him every day, and she's now doing his work for him.
Often the way. I spent a long time in a library trying to dig out old planning documents once. Which I did. To actually get a bit of conveyancing through, but yeah, so it is a market again that's ripe for disruption. I'd need to have a look at it again. I haven't looked at it for a number of years, but definitely a market ripe for disruption.
Yeah. Parachute says, would you be discussing on companies with exposure to India like Saietta? Yes, we've looked at Saietta quite a few times.
We have.
I quite like Saietta on the chart. We'll look at that when they come up with news, but chart-wise, I did own some Saietta, and it broke up. It did quite nicely on them. In fact, it was last time it was in Tenerife, not this time, last time before. And they were breaking up nicely. Wow, They're really moving. And then they just broke down. So the share price, I bought around here and it broke. I think it broke here. I bought around here. They broke up. They broke down here. And I sold here. But they, I think next bit of news, definitely they're using that almost 200-day move average as resistance. But I think it's due a rise on news. I don't know why it hasn't risen the last bit of news, because they've come out with positives. I don't know whether people are worried about the cash level they have or not. But I do like Saietta and what they're doing out there. I think
India is a fascinating market, and it's actually becoming the preferred play of many emerging market investment managers. Yeah. So China is really falling out of favor, but India, it's the fastest of the large, growing large economy.
Even with Apple, Apple now, the iPhone 15 is now coming from some of it's coming from India.
This is a serious thing. So I've actually been speaking elsewhere to a couple of investment trusts that really are very excited by India. Ashoka White Oak, so it's Ashoka India, in fact. The Ashoka White Emerging Markets, which is the only investment trust to list in about 16 or 17 months, and another investment trust called Mobius, which really likes India. Funny enough, Feedback, which gets mentioned for the third day in a row, India is a big market for them potentially, even bigger opportunity than the UK.
Yeah, you mentioned that in the interview. Worth a check out the feedback. Just quickly, ARM's listing today. Of course, it was UK is bought by SoftBank. SoftBank has lost a lot of money. I don't think they've lost money, but they were turned down. They own by they're floating less than 10% of the shares, 9.4% in that. So there we are. So anyway, that's listing day. That's the biggest IPO since Rivian in 2021. This is a good one. Look at this.
I missed this.
This will be good. This will be good for. In fact, who is it? Eneraqua. This will be good for them because their shares dipped on that. They were going to lose 2 million EBITDA on this water neutrality. But now the government has been defeated. They want to expand house building, of course, by just brushing away this nutrient neutrality laws it retained since Brexit. But
wow, I completely missed this.
I just saw this on Reuters, but House of Lords voted it down.
I predicted this. I
thought they're just going to put it back up there somehow and get it through. But apparently, ahead of the vote, Sunak said, or spokesman said, they'll not be able to reinsert the charge if they lost the vote. And it would be devastating for families wanting new homes. Well, not as much for the environment, I suppose, but they can't just put it back in and get a revote in some way, or and couch some people and say, "Go and vote for us." So that's it. I don't know if it's that. And finally, I don't know if it's interesting, but look at this. Cash went up last 2 years, more cash. People using cash, getting paid in cash, but never let the debit card, 22.7 billion, way above that credit card. When's a lot? Do you use cash a lot these days, John?
No, not really. Not really. Only if I'm buying something, that I've got to go and collect off someone from Facebook Marketplace or wherever it is.
Yeah. I only ever use cash when I'm doing the odd jobs for people. So pay me in cash.
No. Wait, what's that? When you're cleaning windows?
After I log off here now, I'm off on the. It's a dual economy. Marvelous stuff. Thanks, everyone. Don't forget, if you like this content, hit that subscribe button right now and share it with someone. Give it a share. Just even someone who doesn't care about stocks and shares, say, I think you like this, and maybe mystified as to why, but just share the link anyway. So speak tomorrow, last day of the week, and of course next week, big week data-wise, inflation, and in fact retail sales, all that, but also the Bank of England interest rates. But last week,
one more hike.
Yeah, that's it. All right, cheers, Johnny.
Yeah.
Bye. I can't find the end button. How do you end the stream here? There we go. That's it. We'll be on forever.